Hey, what's up? Silver Surfer here from lifestyletraining101.com, and we're going to go over how we profited 2,350 bucks off of identifying an ending diagonal in the S&P 500, Nasdaq, and Russell. So this is a wave pattern that was not really easy to spot, but once we spotted it, it gave us confidence to not only enter the trade but hold through any bumps in waves that we experienced on Monday. So today's Tuesday. On Monday it was bumpy, but we held on, and today, Tuesday, the rally came out and it paid off. So last Wednesday I made a note that there was support in this area and it could be a buying opportunity in the low 2040s and upper 2030s. I also gave this specific bull put spread with specifically with which expiration, which strike price, buy or sell, and how much net credit we received. We received a 96-cent net credit, and of course our goal is to make this 96 go down to zero. And today, that 96 became 10 cents. So we basically got to like 90% of max profit already. But that's the option trade that we did. We did the option trade in SPY, the ETF for the S&P. But in terms of futures, we bought the futures in Nasdaq, partly because the pattern seemed this, strongest upside, because during the diagonal, each new low was just a little bit lower than the previous low, whereas with the Russell and S&P, it made a further low. So it seemed like the Nasdaq had less downside. There's a lot of support in 4,300. It tested it basically throughout an entire 7-day period. And once it broke out of this downtrend channel last Friday, we alerted it before the close to buy at 43.20. Now, it's not like when you buy it, it immediately shoots up. On Sunday night, it consolidated. On Monday, it did a lot of consolidation, and at some points, it actually just went very close back down to 43.20. But because of our confidence in the pattern recognition that we chose, and that was confirmed across Nasdaq, across S&P, and across Russell, we had the conviction to hold it through here, and saw what looked like a double zigzag. So this is a chart that we posted yesterday in the S&P. Right, so this is a double zigzag. It basically rallied into the close on Friday. On Sunday night, it did this, and on Monday it did an ABC for an A, and another ABC for a B, which failed to break out, and then an ABC into the close. Now, most people, when they see this sell into the close, basically this is the close right here, 1 p.m. It sold into the close, and then at 6:15 it went even further. Most people would look at that and say, oh crap, it's going to fall down again. But we recognize this as a double zigzag pattern in the B wave position. And so if that rally from Friday was an A and Monday was an ABC double zigzag consolidation, then what follows next would be a C wave rally. And that's exactly what we got today. So today we got that C wave rally. So at the bottom of the B, we got that C wave, and it's basically a big one. And overnight there's a big drop. Right, so by the time we woke up, we were like, "Oh, we got a big one and a wave 2 drop. If this can manage to break over this area, this 2068 area, which it finally did at, I guess, around just before 11 a.m., then there's indication that this could be a wave 3. Now, there are a lot of people who are trying to short this market. I would not, short just yet. I mean, I would want to. If this market stays where it is overnight, then there's a chance that this can go up even more. So if I were to short, I would I would only do it like right at the close, basically. And we actually closed at what, 2078. We got as close, we went as high as like 2079 point something. So that 2079 could be an area to short from with a tight stop. But otherwise, I would not aggressively short on the way up in the low 2070s. Higher 2070s, better chance. But real quick, the on the hourly chart, this is basically what happened: an A wave, a B wave, huge one, huge two, smaller three, smaller four, smaller five, boom. And then so this could be either an A or one, this could be either a B or two, and we go up. So the question is whether this is an ending diagonal or a leading diagonal. If this is a leading diagonal, then you pop to the top over wave two, which we already did, right? The top of wave two was 2076 or 2077. We already went above that. So the question is whether we hit resistance and fall down, or whether we break all the resistances and make new highs. But as a recap, we bought NASDAQ here at 43.20 and sold on the way up at 43.74, just to lock in profits. I mean, I still think there's a little bit more upside. And actually, we went very close to 4,400. I think we went to like 43.98. But in anyway, we locked in 54 points. Now each point is $20, so if you do 54 times 20, it's kind of like 50 times 20, which is $1,000 in profit. So just on that one trade, that was $1,000. And in the option trade, we did 15 contracts, which is our typical size, and so that's basically close to $1,500 in max profit. We got to 90% of max profit today because this 96 became 10 cents, and there seems like there's going to be a good probability that this could expire completely worthless. So that 1350 could actually be closer to 1450 or 1500. But for now, we have 1350 plus the 1080 from the NASDAQ trade, so it's close to almost $2,500 in profits. Again, that's the trade for that we held from last Wednesday and Friday into today, Tuesday. So about just 3 or 4 trading days. So a nice return on our capital. So that's how you profit from an ending diagonal. When you identify an ending diagonal like this, or in the NASDAQ chart, here you have a 1, 2, 3, 4, 5. The end of the 5-wave pattern, that's when you buy, especially when it intersects with the cross of a downtrend. So that's the way you profit safely, is to buy here and then sell anywhere. You could probably hold up even longer and make even more, but for now we just took profits there. So that's the trade recap for Tuesday, May 10th.